Welcome everyone. This is our Thursday morning production call. We got a good one lined up for y'all today. uh, it's the science inside of the appointment, and we got some really cool tricks that'll help you close a ton more appointments, right, and help more families and put protection in place. Before we get started, I always like to cover, right? This is an hour-long call. You are not going to remember everything we talk about today. So please get a pen and notepad out so you can take some really good notes. We're going to break a lot of stuff down into details. One of the biggest things we love to teach is we do not want you to take everything that we teach today and then go change your entire appointment. That is not what we want you to do. You are already helping families and putting protection in place. What we love to teach is take plenty of notes, and then take 2 to 3 things that you think are going to help you in your appointment and simply add those. Right, the hardest part about learning and getting better is actually applying it into your appointment. Right, because we'll take down notes, or we'll go through some learning stuff, and then we just forget to add it to our appointment, right? Because we just go back into our routine. So the hardest thing is actually applying those 2 or 3 things into every appointment and continuing to get better. So a couple of tricks, like we said, is really highlight 2 or 3 things and be like, hey, I want to add this in my next appointment. And it works really well. Mr. Eduardo, I think you did that last weekend, and right, I think you've written another 2,300 total, right, over the past week from just adding some of the stuff you heard on the call, right? So I appreciate all of y'all being on here. And then one of the biggest things, we are a large community in the Cook hierarchy. If anything you take from here and you go apply it to your appointment and it helped you help a family, if y'all can post that on Band, it really does make a difference, right? What you took, and other agents can see that, and that way they can add it to their appointment. So we're gonna get started, right? The science of the appointment. Um, what do we mean by that? So the cool part is, one of the reasons I chose Symmetry was I wanted mentorship, right? I wanted a system so that I didn't have to go figure this out. I come from the restaurant business, some car sales, right? And restaurants. I've never done consultations or face-to-face sales like this, or done any insurance at all. So my biggest thing was I wanted a system, right? Like, tell me, I was really good at scripts. Where we used to work in the restaurant, we had a script, right? And the server just followed the script, and they were the highest performers and the most money makers. And so when I saw Symmetry, that they had all this laid out for us, I fell in love with that, right? I don't want to go try to figure out how to talk, or what to say, or do the whole, I want it to sound like me. I want something very systematic that I know works at a very high level. And that's what all our scripts do. And so what we're going to cover today is kind of the science behind it, because what I always see, right, over the past 7.5 years is we come into this industry, or we come into Symmetry, and we come into working mortgage protection, and we still try to bring what we knew, right? And one of the problems with that is, look, you may get a sale, right? More than likely, you're going to help a family because they want the coverage no matter what. It was not because you were very charismatic. It was not because you, said something, or because you brought this over. It's just our leads are legit, right? Like, these people want coverage. You're going to fall, right? You're going to get the low hanging fruit, the one that you couldn't mess up the appointment if you were brand new, or if you're way off script. Like, people are going to get this coverage. They want to protect their home. And so that's very deceiving when we come in here, because we're like, hey, I did this, and I sold the home, right? Or I helped the family. And then all of a sudden it's like, well, it's me, right? And what I want to teach y'all in 7.5 years is, me can all of a sudden, right, be helping a bunch of families, and then all of a sudden we're not helping families, because it's not a very consistent system. The cool part is Symmetry, over the past 15, 16 years, have put together scripts and techniques that keep you at a high level, right? And that's what we're looking for, consistency, right? We weekly want to go out and help families every single week. And the best way to do that is do what works at a high level, right? And so I stopped trying to do it my way. I simply follow the script, and it works at a very high level, right? Last week we wrote $18,000. This week I think we've already written, let me see, 6 applications already for right under 5,000. And if you ever hear my appointments, I just say the exact same thing every single time, right? Like the agents that hear me run an appointment, they laugh, right? Because we say the same thing and the same little jokes in every single home. And it's like, how does that work? I'm like, I stopped trying to figure out why it works and I started doing what works, right? Like so many times we're like, well, why this, why that? So what I love about today is we're going to kind of dig in why it works at a very high level, because there's a lot of science built into these things that help you close at a very high level. So we're going to get into it. We'll break this into pieces. The first part is going to be the rapport building. Look, I know sometimes we're like, the family or the client, right, doesn't want to build rapport, or, I'm really good at building rapport, so I'm going to do it this way. And there's two things that I'll give y'all on this. One, if you don't build enough rapport, you're not going to get the sell. They don't trust you. We're still taking in all their information. We're asking for socials, height, weights, health conditions. We're digging into their budget. We're asking for bank information, right? And a lot of times they may be telling us, right, that they're not interested, right, or that they're just shopping around. But I promise you, right, about 80% of the time, it's because they don't trust you yet. Okay. It's if you've ever sold cars, the joke on cars, right, or a car lot is, right, the client comes up to you, or you go up to the client when they're walking on the lot and they're like, hey, I'm just shopping around, right? I'm just looking at cars. That's a lie. Okay. In case y'all don't know, the joke is that that's a lie. If they are on your car lot, they specifically came for a car on your lot. Like a family or a client does not go to a random, right? If I'm looking for a Jeep Wrangler, I don't walk onto a Ford lot to go look and shop around, right? Or if I'm looking for a Jeep Wrangler, I know what color I want, I know what type, what year, right? So I don't walk onto the lot saying, I'm just shopping around. No, the joke is in the car lot world, right? Is if they walk onto your car lot, there's a car on that lot that they specifically came for, and your job is to uncover which one, right? They're just look, they know they're about to get sold, right? And so they have their walls up. And so the joke is, right, that, hey, I'm just here to shop around, right? I'm just looking around. Like, no, they're here on your lot for a car. And it's the same thing for an appointment. What I love to dig on rapport is actually the first reason that they showed up. So if they showed up to your appointment, there were way too many yeses for them to tell you they're just shopping around. Okay. They bought a home and they received a letter in the mail. They received a couple of letters in the mail, right? And I'm being nice right there. They received all types of forms, a little postcard, the one they can fill out. They probably got phone calls, emails, all kinds of stuff, right? We ain't the only ones doing mortgage protection. So they had a whole bunch of that show up to their home, and then they decided to respond. Okay. And if you're working CI leads, what I love about a CI, right, when they're like, well, we kind of, no, they could have hung up at any time, right? Like they went through the entire process. They typed in everything, or they hand filled out an MIA lead. They walked it to the post office. Then we called them, right, a week later or a couple of days later, or if it's a call-in lead, why I like it. As soon as they hung up within our system, we called them that day. They said yes to an appointment. Then they showed up and prepared for the appointment, right? They got to either download Zoom, they got to make sure they're ready wherever they're at. They showed up for the appointment. I promise you, they're not just shopping around. They understand what this is, right? They just have their walls or defenses up. Our job is to have them relax and understand that we're just here to help, right? So on the rapport building, there's a couple of really cool things that are going to help you. The first one, right, is that I love to teach, right, is 5 to 10 minutes. Okay. Please write that down. 5 to 10 minutes. You need to build rapport for 5 to 10 minutes. Anything under 5, you probably didn't get enough rapport built. Anything after 10 minutes is way too much. Why way too much? If you become their buddy buddy, the buddy buddy's going to tell you, hey, you know what? We're just going to think about it, or I'll call you back. Right. We want to keep a fine balance of professionalism, right, and trust. And where that is, it's about 5 to 10 minutes of rapport building. That's all you need, I promise. right? Now it's all about being very tactful, right? So 5 to 10 minutes on rapport building, but now the tactics. Something we learned again from Symmetry is you want to go at least 7 questions deep. So please write that down. 7 questions deep at minimum. Okay. What we're trying to accomplish here is them talking to us. One of my favorite sayings of when I know I probably close at an 80 to 90% rate when I hear this saying. And that's when we've been talking for about 5 to 10 minutes and they say, "Hey Joe, I'm sorry. We're supposed to be running an appointment, right? Or we're supposed to be talking about insurance." When I hear that phrase, that means they have forgotten, right, that this is a business meeting and they were just talking. So that's my favorite phrase to hear in my appointment. So y'all can write that down. If you ever hear it, you better be super excited because that means their trust is very high with you, right? And what that was again is, "Hey Joe, I'm sorry. We were supposed to be talking insurance or we're supposed to be running an appointment." Right? When I hear that phrase, I know they have forgotten that we're just simply, right, we're here to do business and they were just talking to me. So that's my favorite phrase in that. Again, how we do that is through at least 7 questions. And the reason why they teach 7 questions is because at the very beginning, it's a very dry rapport, right? And so how many of y'all have ever ran an appointment and you ask them a couple questions and it's almost like, oh, this person's going to be mean or they're going to be rude or they're not going to talk to me or share information. It's not them or you, it's the trust is just still not there, right? So what it sounds like, James, if you're out there, right? Well, I always love to do it, right? So we'll go through 7 questions because the goal is to get them talking more than you, right? So it usually sounds like, right, when you first ask that question, it's like, "Hey, James, thanks for hopping on. Looks like I got you out in San Antonio, Texas."
Yes.
And that's it, right? It's just one word answer, right? And like, okay, and so we got to pull, right? We got to be able to get more out of them. One of the tricks in this, right? The science in this is if you just ask 7 questions, or if you're trying to build rapport by getting to know them, and listen, right? It sounds like I'm doing my job, I'm getting to know them. But if you're just asking questions, what you're actually doing is you're interrogating, right? Because this is what that would sound like. James, so where are you from?
Uh, I'm from Texas,
Okay. What part?
San Antonio.
Oh, sweet. And so is this a new home for you?
Yes, I just moved. It's a rental.
Gotcha. And what brought you over here?
Family, work.
Right? And they're still keeping it short. Listen to that, right? And then it gets into they actually start combating you like, "Why do you need all this information?" Because you just like, oh, okay, so it's a rental suite. So do you have more of these houses?
Do I have what? I'm sorry.
Do you have more of these houses?
No, this is my only house.
Gotcha. Sweet. Anyone come over here with you? Any family?
My son.
Right? And they keep it really short, and you'll even start to hear stuff like, "Well, why do you need to know this? Let's just get
What
let's
does that
just
have to
get to
do
the
with
point."
mortgage protect?
Right? You'll get that, but because we think we're building rapport, but realize we just interrogated them for 5 minutes. Right? How many kids do you have? What are their names? What is this? Right? I'm still asking all the right questions, but they're like, what why are we doing this right now? Right? Realize when you get with your friend, right? So what we love to say is you got to make a best friend in about 5 to 10 minutes, right? And so if you just do it that way, think about this. When you're talking with your friend, are you the only one talking, or y'all both going back and forth? Right? You're both going back and forth. And so what really good with rapport building is, write this phrase down, is make a deposit before withdrawal. Right? So write that down. Make a deposit before withdrawal. So I'm gonna ask the next. I'm gonna do it again, but I'm gonna do this. I'm gonna ask the same questions, but I'm gonna make deposits before I make withdrawals, and listen to the conversation. And as they start to talk more, right? Because I'm not interrogating it anymore. I'm just talking to a friend. Like, sweet, James, looks like I got you in San Antonio. I'm originally from San Antonio myself. So, is that where I have you?
Yeah, yeah, San Antonio.
Sweet, sweet. And what is this a new home for you, or is this a refinance? Because I just got my home in August, and the bad part is I didn't want to move in the middle of the summer, but I did.
Yeah, you don't want to move. It's hot. Yeah, this is a new home.
Sweet. And any family members move in with you? Because I moved out here first, and all of a sudden, my mom, brother, and sister, and everybody followed.
Yeah, this my son moved with me.
Sweet. Congratulations. That's fun. New home and moving in with your son. And just realize, right, again, I'm almost the best way I can phrase it is answer the question for you that you want them to go answer. Right. And hey, James, so and so you said you had right, your son moved in. I got four kids myself. Is he your only son?
Yeah, with just one son, one and done.
One and done. I like it. I got four. I got two 13-year-olds, an 11 and a 7. So I get it. I get it. And mine playing sports. Does your son play sports?
In sports, he does taekwondo and doing some jiu-jitsu stuff, karate.
Fun. That's cool. My little one does that too. So
Nice.
yeah, yeah. And right, and again, right, they are starting to talk more and more, but because I gave them information about me, right? I made a deposit and then I'm asking for the withdrawal. That changes the whole dynamic of the rapport building because you're not interrogating them anymore, right? And again, you want to go about 7 questions deep in this. And it allows them to get into that talking right phrase. And Jimmy, if you want to unmute, right? We went to the right, we were doing this with Jimmy the other day. And so we got about 6 or 7 questions that'll start helping you build rapport. Okay. And then I'm going to give y'all some nuggets on where to help you with some of this stuff. So Jimmy, right? So all right, a lot of one of the main questions was like, what do I ask?
Yeah,
Right. And so, Jimmy, what was the first question we came up with?
looks like I have you in, and then you just basically say their city and state.
Right. So, first question looks like I have you in this city or state, right? Whatever it is. Question number one. Question number two, Jimmy.
Are you originally from there or where are you from?
Very simple, right? Are you originally from there? Where are you from? Number three.
Is this a new house for you or did you refinance?
Is this a new house for you or did you refinance? Number four. Or are we on five? Where am I?
It might be four now. Anyone else with you in that area? And then just basically like family, friends, anything like that.
Right. So, hey, did somebody, right? Did somebody move with you? Or, right, if you know it's just them, like, hey, did you move to this area? Is there someone else that lives out there, right? Any kids, cousins, right? Again, we're just trying to withdraw information. Then the next one,
What did you move out there for work?
right? Did you move out there for work? Right? What brought you to the area? Right. And again, these are just great questions to get started. I always, right? We're going to leave y'all with those so you can kind of come up with the next ones, right? I would have always a good loaded 10 questions. And the cool part is, as you practice them over and over in appointments, right, you start to get really good at them. The biggest thing is making a connection with them, right? The deposit part. And right, Jimmy, you said you were telling us while we were going through them, you're like, well, I can't connect with them, right? Like, well, what do you
Yeah.
mean? And right, what I want to teach all of y'all, we can connect with everyone. And there's two really good tactics, and I highly recommend y'all go do this. So first, if have y'all ever heard the word Ford, the acronym for Ford for rapport building? Okay. If you don't know what that is, I highly suggest go on YouTube and then just simply type in Ford for rapport building, right? And what Ford stands for is family, occupation, recreation, and dreams. But it's a really cool tactic to build rapport, right? It's how you get to know somebody really quick, right? Again, if you're here, we've asked some of those questions already in those 6 questions that we gave y'all, right? Did anyone move over here with you, right? Did you move here for work or why did you move to the area, right? And so again, these are just really good tactics on being able to build a rapport. The biggest one on this one, because we have such a tight time frame, right? We have that 5 to 10 minutes of being able to build rapport, is called the gift of gab. So I highly suggest y'all go learn what the gift of gab is. And same thing, YouTube will teach you a ton of stuff. The gift of gab. I always love to explain this because we're kind of like a bartender when it comes to the rapport building with a client. What do I mean by that? Again, I come from the restaurant business. A server got to go to the table, they build a little bit of rapport, and then they walked away. Right. So it wasn't that nerve wracking because they were able to walk away from their table, right, and not having to be there in front of them. Versus the bartender has to stay in front of the client the entire service time, right? So it could be an hour to 2 or 3 hours. They are in front of the client and they can't walk away. And then what would make it even weirder is if the bartender doesn't talk to those clients. Realize when the clients go to a bar, it's usually because they don't have a table or they're by themselves, right? They're sitting at the bar because they don't want to sit by themselves. They want to be able to have a conversation, right? So the bartender, we called it, we had to teach them the gift of gab. The best way I can kind of elaborate a little bit is you got to have conversation for almost any topic. And the really cool part is we actually have an advantage here running an appointment. And what do I mean by that? Is we know at least what city and state they're in, right? We know their age, right? So we at least have a few things that we can go prepared to have the gift of gab, right? So if you're running an appointment, like I always use example of New Mexico, right? So when I'm running a New Mexico appointment, I always bring up Carlsbad Caverns, right? Like everyone in New Mexico knows about that because I always ask that question or tell them, right? Like, hey, I want to go there, right? It's on our bucket list for me and my wife and the kids. I now know all these weird facts because the families tell me all this weird stuff that bats come out, thousands of bats come out every single night from the cave, right? That it's like a couple of miles down all the way, that it stays like at a perfect 68 degrees year round, no matter what the temperature. Like they've taught me all these things, right? Because I'm just building rapport, but I'm trying to connect with them, right? So what the gift of gab is, how do I go in there prepared? The biggest things we always taught was, right, know what city and state that they're in and anything about that, right? If you're, right, I think we were doing, so Mike, I think we were talking about Philly, right? And right, the Rocky Steps, right? And right, so city and states, you can connect very easy with things that are in there, right? If you're running Nevada and Las Vegas, it's super easy, right? You get the strip to talk about, right? You get to talk about their food, whatever it may be. Find something in that area. Like our job is to go into the appointment prepared, right? A couple of other things is no sports and no weather, right? Like if someone's going through some crazy weather, bring that up. If there's floods in their area, guess what? That's a great, they will start talking, like asking one question will have them talking for 2 minutes. And that's how they become your friend like that. Right. So again, going into an appointment a little bit prepared. I'm not saying go spend 30 minutes prepping for your appointment that way. I'm saying this should take you about less than 5 minutes to know little things like this. Right. So again, sports, weather, city, state is the best way to kind of connect with anyone in those areas. And it's a cheat code, right? We're trying to give y'all a cheat code. So I hope y'all wrote those down. So it's the gift of gab and Ford. Okay. Again, YouTube has amazing things, way more that I can teach you. Go watch a couple of videos in the nights, in the mornings, right? Because it'll teach you to build really, really good rapport. Jimmy, we've been talking about this with you for not even 3 days, if that.
Yeah, a couple of days I've been applying what
Right.
I've been
And
learning.
how have your appointments been the past 2 days with rapport building?
Way better. Yeah, way better.
Right.
For sure, yeah.
The guy that's texting you after the appointments.
Yeah, that
Right. And so realize, again, we're supposed to make a friend. What I love to teach an agent, when I get off an appointment, I know everything about them, right? Because I've interrogated them, but they know everything about me. They know I have 4 kids, that 2 of my kids are from my ex, that we go kayaking, that my brother's in the office and my nephew's in the office with me, that my sister used to work here. Like they know everything. I used to be in the restaurant business, that I'm from San Antonio, that I like the Spurs, that we're bringing up sports, right? That I'm a Cowboys fan. Like they know absolutely everything that I know about them. There's so much power in that because when you start going through the script, they're not pushing back on anything and they trust. When we get to options, when you've built really good rapport, you'll hear things like, well, what do you recommend? Or which one do you think we should do? Right. So one I ran yesterday that look, hopefully, right. I'm going to write 3 apps today from them, but they're like, hey, we want to do these 2. But what do you recommend? I'm like, hey, look, those 2 are accidentals. They're great. Highly suggest those. But right. And so my main concern is the husband's bringing in the majority of the income. She brings in very little. She's the one that's going to be in a really bad spot, and they don't have much in their savings account, and they have no life insurance. Right. But when they ask me that question, I get to say, hey, you know what? Look, those 2 options are great. Highly support those. But John, you should probably look at one of these other ones. That way, no matter what, at least we know Mary's going to be protected, right? If it's not an accident. And they trust. Their answer is like, okay, that makes sense, Joe. That's what we're gonna do. Let's get on tomorrow, right? Because they're running out of time. Let's get on tomorrow at 2:30, and we'll do that. We'll spend the night over and think if we want 6 months to 12 months. But the trust is there because now they're asking me for my opinion, right? And because if not, you'll get the good old, well, we need to go think about it, right? Or we're gonna go talk to our brother, or we're gonna go talk to this person, right? Guess what? They don't trust you. And so just building that rapport is extremely important, and not just rapport. It's a trust level, right? It's they got to feel like you're their friend, not too much, and that has to be done in about 5 to 10 minutes. Anything after that, we've noticed, right? Again, agents just get more think about it, right? Because you're too much their friend, and they think they can just call you tomorrow. Right? We don't want that. We want to keep a fine, right? A good balance, right? Of trust, business, and a friendship, right? In 5 to 10 minutes. So that's rapport. Again, we dug into this for about 30 minutes. It is that important. I promise you, it makes a difference in your appointments. The next one is going to be words. So write this down. Words that kill your sales. Words that kill your sales. And so the reason why this one's a tricky one is because we don't realize that we're saying things that's making them change their mind, right? And what do I mean by that is we say phrases, we plant seeds, right? So we can plant a good seed or we can plant a bad seed. And what do I mean by that? Well, I'm going to give you all the first, right, kind of the easy ones, right? So the first one is only, right? Stay away from the word only, and I'll teach you how to leverage it. But for the most part, you should never use the word only, right? It only does this, right? It only does that. We teach how to pitch the mortgage protection plus the accidental, right? So y'all can kind of get a really good perspective of how much money is in adding an accidental. It's 30% of my business. 30%. So if on my personal PIN, I deposit 200 grand a year, 30% of that is $60,000. Okay. You are leaving $60,000 in deposits out if you're not adding the accidental. That's how much business it is because it's just added to everything else. Right. So be careful with the word only. So when we're pitching accidental, right, and this is where we usually hear it, we say stuff like, it only pays out. It only pays out. And guess what? Your number one objection for that is going to be like, well, it only pays out if it's an accident, Joe. I'm not going to want that one. Right? Well, guess what? That you planted the word only in their head. Right? When you can change the phrase, right? What do I mean by that? Is like, hey, so this one's going to pay out if it's an accident. The cool part is it'll pay out no matter where you're at, home, vacation, work, right? Long as it's an accident, it's going to pay out. I said the same thing, I just didn't say only, right? So it's learning these little phrases that kill your sale. The next one is when you're showing options, are you using the word expensive or a lot? Right? So don't use expensive, don't use a lot, right? Well, this one's more expensive, right? The full mortgage payoff. Well, this one's more expensive, or 24 months of critical period is more expensive, or it's a little bit more, right? It's a lot more, right? Those are killing your sale. Guess what? They no longer want it. It's a lot more, right? Or when you're explaining any type of coverage, I've heard all kinds of stuff. Well, if we kind of go to this, right? If they're asking you like, hey, well, I know a little bit about insurance and I know about term and I know about whole life, right? I want this one. And if you say, right, let's say they're going the whole life route, I'd like a whole life policy or something that, right, won't end. And you're like, well, that one's a lot more expensive. You're not listening. They just told you what they wanted and what product they'd like to be in. And you just ruined that for them because now you're like, well, that's a lot. And so now they're like, well, that's going to be a lot. We're not going to be able to get this. You planted that seed. Or if they're saying, hey, I heard terms great because it has living benefits, right? And they're asking you questions about what's the difference. And you're trying to be the best agent that you can. And you're saying, hey, well, the term, well, it only runs for 15 years at your age. It only does 20, right? Again, now they're like, well, that's the one I wanted, but it only runs for, right? Again, you're planting these seeds with words that kill your sales, right? So just be very careful in the restaurant business, that at least the one we were in, right? They taught us, right, to never use the word no, to use word like unfortunately, right, instead of no. And so it's the same thing on this, right? Like don't use the word only, don't say the word a lot. You're going to kill your sale again, right? Another really big one is declined. Guess what? Everyone's had a decline, right, in the appointments. I get them all the time. Last week was a whole lot, right? So you don't have to tell your client, well, you got declined, right? There's just nicer ways to say it, right? Well, hey, it looks like that company didn't like something they see, right? Or hey, looks like that one didn't take you. We're going to just move over to this one, right? Remember, they're still their feelings. They're excited. We pitched them a concept, right? And they wanted this coverage. And then you tell them you got declined. People get their feelings hurt. And then instead of letting you move through the next stage, right? You just told them they got declined. They'll totally shut down. Well, why? What was it? Right? Have you ever got a decline and they're interrogating you about why the insurance company didn't take them? Well, what do you mean? I'm perfectly healthy. Well, it doesn't make sense. It doesn't matter. The whole point is the insurance company didn't take them. We need to pivot. Right? So we don't have to tell them they got declined in those words. We're just like, hey, looks like we're going to have to move over to the next carrier. They saw something that I didn't take. There's just so many different phrases that you can use that right, the better fit. I love that one, right? Like, hey, there's a better fit over here. Looks like that one wasn't. Right? There's so many different phrases. Again, just be careful with what you're saying because you can kill your sale. Another one is leveraging the bad words to help you guide the client the right way. Okay, what do I mean by that? Look, the script is great. Okay, but 85% of our business is critical period. Right? Everybody understands that theory, right? And if you don't, please, super interactive, unmute and ask, right? But the majority of our clients, we're going to help them with critical period. Critical period is going to be the whole life policy, right? Where we're talking about payments only, 6 months, 9 months, 12 months, 18 months worth of payment, right? That's going to be 85% of our business. The problem with the script is it talks about, hey, we're going to go over 3 options for you: the full mortgage payoff, the partial with an accidental, or critical period. So you have to realize on the client's behalf, right, or on their defense, up until this point, and we're running an appointment, they're still thinking they're going to get a full mortgage payoff. I don't care if they're 81 with a heart attack 2 weeks ago. They're going into the appointment with the fact that I'm going to get my whole $400,000 house paid off at 81, right? And I'm on a pacemaker because I had a heart attack 2 weeks ago, right? So we have to shut that down for them. We have to shut it down in a nice way, right? But we do have to be very assumptive of where we have to guide them of where we're taking them, right? So again, you should be prepping for your appointments, right? Last week we talked about the 10 steps, right, of prepping for appointment. So you should already know what options you're gonna be showing the client. So if it's complete no, right, heart attack, stroke, any major illness, and we know they are not qualifying for a term, okay, you need to take that off the table for them. And you get to leverage the bad words that we just talked about, right? And you get to do what I call is poke the bear, okay? Listen, this is life insurance. It is based. Look, we don't determine. This is one of my favorite things to say. We don't pick. Okay. I think one of the misconceptions here as a mortgage protection agent or life insurance agent is we're picking the products for the client. Okay. You don't. You're a consultant. The client and their lifestyle over the past years determines what policy you show them. You have nothing to do with the options you're showing them. It's based on their age, health, and budget. Okay. You're just trying to fit inside of those age, health, and budget. So you are not, I promise you, if you ever feel like, man, I wanted to get them the whole mortgage paid off, or this sucks for the client. Like, no, you had nothing to do with that. Their age, health, and budget determines what you're showing them. Right. And so when you're going there, you get to poke the bear, and you have to, right? Because again, you're going to get a 78-year-old that wants their entire $450,000 house paid off, right, for $100 a month. Okay. That's not going to happen. Right. So you have to poke the bear. And so if you know you're going critical period, one of my favorite things to teach an agent is do not talk about option 1 or 2. Okay. 2 can completely come off the script. And you can mention option 1, but you're using it to leverage, right, to kill that sell. This time we want to take that off the table, right? So you get to poke the bear. Hey, so Rodney, it looks like, normally families use, right, a couple of different options. The first one's the full mortgage payoff. Unfortunately, you're not going to qualify for that because of the heart attack 2 years ago, right? I'm taking it completely off the table, right? So Rodney, right, that's the first option, the full mortgage payoff. Unfortunately, that's one that you're not going to qualify for, right? Which was the full mortgage payoff because of the heart attack 2 years ago. Like, I'm taking it off the table because have you ever ran an appointment and you're showing critical period, right? And all of a sudden they're like, well, I thought we were paying off the house. Or I thought this is what I thought we were looking at the whole house. I don't understand. What do you mean 6 months worth of payments? I thought we were paying off the entire house. On their behalf, you probably ran the script and talked about the full mortgage payoff, right? So we have to take that off the table going into the appointment, right? And so leveraging things like that. And then if they're questioning you, right, of, hey, I thought we were looking at the full mortgage payoff, you get to poke the bear, right? And poking the bear is talking about their illnesses or why, right? Like, you don't have to sugarcoat that because you got to understand, on their defense, they don't understand. And so you have to make sure they clearly understand why we ain't showing that option. So there is nothing wrong with poking the bear in those situations, right? Which is, well, because of the diabetes and insulin, right? That, it's a big deal, right? Like, you have to kind of, again, scare them a little, right? Like, it's being diabetic and on insulin is not a good thing, right? They are not healthy. It is a bad situation for them, right? Like, and we have to be able to communicate that with them properly. Again, don't be really mean about it, but we do got to poke the bear, right? Well, the heart attack, right? Unfortunately, right? These are things, right, that are not going to allow you to get that coverage. So we can take that off the table and now focus on what is next. And so a great way to recover from those things, right? Or once you say that is, now the great news is families in your situation do equity protection or the mortgage payment. And the great part is it's the least expensive option, right? So, like, you get to add stuff to make it sound great because it is what it is, right? And listen, don't ever forget what we're really doing here. Okay. A $10,000 policy for $200 may not sound great to you. I promise you it's life-changing for them. I always tell everyone about my mom, my dad, and my uncle. Okay, my grandparents passed away when we were, oh, let me see. I think we were probably in our late teens, and they left their. My grandpa left the house to my dad and my uncle, the two oldest. Okay, they'd probably lived there, I want to say a good 12, 15 years. They had to have had really good equity in the home, right? A good 60 at least, right? 60, $50,000, if not more. And so they left it to my dad and my uncle. Between the two, couldn't afford the payment. Okay. The bank came in and they sold it to the bank for what was owed. That's it. They got no equity out of the 15 years that my grandparents lived in that home. A $5,000 policy, a 5,000 Living Promise Eagle Select would have changed my dad's and my uncle's life, because they both would have been able to cash in 30,000 each on equity from the home. Right? Do not forget what we're doing. Our job is not to pay off the entire home. Our job is to make sure if somebody passes away or if something happens, the other person or the family doesn't lose the home and the equity built into it. Right? It's mortgage protection. It ain't house payoff. Okay. And I think that just when you truly understand that, they hear it in your voice. Right? Like I have more conviction than any client can ever sit with me and say, hey, well, that's only 10 grand. I'm like, yeah, you know what, John, you're right. So it is 6 months worth of payments, but I'm looking at y'all's right budget right now. And Mary, y'all got $2,000 in the bank account, and John, none of your income comes to her. So how does Mary stay there? They can't tell me anything, right? I have conviction of the appointment that I ran. And so $200 makes a huge difference for them. Then you'll hear stuff like, right, because of those words, you'll hear stuff like, well, I can save that. I'm like, well, we have 2,000 in the savings account. How's that going? Right? That's called poking the bear. Our job is to put something in place and leave them in a better spot. And so these words, right, are leverages, right, to make sure we get the sale, right, and get them out of their own thinking. And so, again, cool ways of leveraging it the right way, right, of taking things off the table by, right, saying, hey, you won't qualify for that. They're not going to take that. So, again, be careful with how you, again, what you're saying and how you're saying it, because you can be killing yourselves. Anything on words that we can kill ourselves? All right.
Joe, just quick question. You were saying, so you were like, oh, you have 2,000 in the bank account. Is that you referring to them as they won't have enough to cover their mortgage in case something does happen?
Correct, right? So when you're doing their financial information, you're breaking down their budget, right? You should know what's in their savings account, how much money they have, and their bills going out are 4,500 a month. The reason I say that is I'm talking about actually the appointment that I ran yesterday, right? He brings in 6, she brings in 1,500. So he brings in 6,000 a month, she brings in 1,500. They literally only have $2,000 in their savings account, $4,500 a month to take care of the house payments and everything, right? The bills, cars, and everything. Literally, she can't go a month if he dies tomorrow. And they're 62 years old. They're both still working, right? That is and with no life insurance, right? Like a small policy for 6 months will make a huge difference for her, right? She can figure out what's the next step. We'll put the house for sale, move in with somebody. I mean, we're just making sure she's in a better spot, because based on their age, health, and budget, we can't pay off the house, right? Again, has nothing to do with the options I put together. That's her lifestyle, right? Her health, right? Or his, right? So just understand, we're not picking options for them. We're just being really good consultants and finding out and talking to the family. So great question. So the next part, right, is I want to dig a little bit into the 3 options that we talk about, right? I kind of said it, right? When you're prepping for an appointment, just make sure, right, you know which options you're going to show them, so that you can leverage that at the beginning, right? So when you're going through the script and explaining mortgage protection, do not go through, right, the full mortgage payoff, the half, right? Most families do this, and then because if they don't even qualify, you got to take it off the table there. And then on the reverse side, right, again, you get think about it when we provide too much information. So if we know, right, they're 26, right, or they're 30 and we're showing the full mortgage payoff or a half, we don't have to talk about option 3, right? You don't even have to explain it. Hey, most families, Danny, they do 2 options, the full mortgage payoff or partial, right, with maybe adding an accidental, and I'll go over those in a little bit for you, right? And so again, I'm not providing extra information to confuse them, right? Because then you get to the options that you show and you're only showing the full mortgage and the partial, and they're like, well, Danny, didn't you say there's 3 options? Which one was the third? Right? And then you got to go explain what equity protection is. And they're like, what? Right? And then now they're like, guess what? Now they are confused. Now they really do need to think about it. Right? So on behalf of their side, right, make sure we're only talking about what we're going to show them. So leverage those when in the script, when we're talking about the 3 options, take whatever we're not using off the table. Right. So if you're showing full, if they're young, you don't even have to talk about equity protection or critical period. Right. It's just extra information to confuse the client. Remove that from the script. So make sure you're prepping for them so that you know that.
Hey, Joe.
Yeah.
Joe, on the PowerPoint, do you actually remove it from there and only provide the 2 options, a full and a partial?
I don't. So I don't use the PowerPoint, but if you're using the PowerPoint, just don't cover it. Right. So if they see it, I promise you, they're not really paying attention that much to the PowerPoint. They're actually listening to you, right? So you can just skip over it. If they do, right, ask a question, well, what's that one? Again, just be like, oh, we're not going to use that one today, right? Because y'all are young and healthy.
Yeah.
Right. Skip it. You do not want to explain it. It's extra information that's going to make them think about it. Right. So
what I've heard James do in that situation, especially if they're young and healthy and you're not going to go over it, he goes, oh, this is for my clients over 50. Haha, that's not you.
Oh, that's great. That's a good one.
Great, thanks.
I like it. So the next part, right? So write this one down, is explaining options. Okay. This is not that we kill the sell here, but this is where we confuse clients a lot, right? And so realize when you're showing options, if you're getting a lot of think about it, or if you're getting a lot of questions, don't think that it's the client being a good question asker, right? You confuse them. Okay. When you're done showing options, they should be very clear and understand what you said, right? They should be saying stuff like, so that first one was an accident, right? And that pays the 300,000. And then, so the other ones were right 6 months, right? They should be almost parroting what you're saying, what you said, right? You should hear stuff like, if one of them's confused, right? So like on that one, the wife was a little confused still, right? And the husband was answering the questions for her. No, sweetie, remember this one's 300,000. If I pass of an accident, it's paying. Like they're saying the exact same thing I said. Right. So that's when you know you did a really good job. Now they're both asking a whole bunch of questions like, well, I don't understand. Tell me what this one meant. You've confused them. So when you're showing options, it's all about simplicity. Okay. Some of the big rules of thumb, right, to not do is when you're showing options, please don't put the name of the policies down. Right. Like don't put living promise. Don't put term 125, 15 years. Don't put Eagle Select, Mutual of Omaha, right? Y'all type in the carrier. Some of y'all may even throw the logo on there. Like you're just confusing the client, right? We'll go back to car sales. Your job as a great salesman is to have them paint a picture of, does the car, right? Is it the color that they like? Right? For our case here, does it do what it needs to do? Is it the color that they like? Does it do what they do that they need it to do? Right? Does it fit their need? Right? That means, does it cover their budget? Right? Does it fit their need? That means, right, if it's a mom with a minivan or a guy looking for a sports car, right? And then the third thing is, does it fit their budget? Those are the 3 simple things of making sales, right? Of fit, again, making sure we're showing them the right option for them. So in this case, right, is we love to use the terms, right? Mortgage protection options. That's it. That's all you got to put, right? If you're showing equity protection, you can put payment protection, right? But even mortgage protection options is still fine, or program, right? Mortgage protection program. Doesn't matter what we're showing them. We're just, again, we want to keep it simple, right? And then so if you're showing the accidentals, mortgage protection through an accidental. That's what I put, or accidental mortgage protection. Those are just great little easy phrases, right above the options that you're showing them if you're showing them a visual, so that you're not saying, hey, so I'm going to show you Americo term 100. It's a 15-year term, right? And we're going to go over maybe 15 and 20. You're now talking insurance lingo that they know nothing about, okay? Our job is to make it very simple for them. And then so the next thing is, right, we don't show all those names. And then the next thing is you don't show them a whole bunch of options. Okay, so you don't show them term 100 and term 125. You don't show them, right, pick a term, and either you're going to do the full amount for a 15-year term or a 20-year term, and the full amount, and that's it. Or you're going to show them, right, a 20-year term for the full amount, half, or a little bit less. Do not change the amount and the term. Okay, either you just change the term or you just change the amount. Anything past that, I promise you're going to confuse the crap out of your clients. Guess what? They're going to be like, well, we need to think about this. Okay, and then the great rule of thumb is when you're showing accidentals, anyone under 70, right? So 70 or below, you should be showing them guaranteed advantage with Mutual of Omaha, and you only show 2 options of the accidental. What we do is if their mortgage is 250,000, we go up we go up 100,000 or down 100,000, right? We would just round up or down. So if it's 250,000 for the mortgage, we show 300,000 of guaranteed advantage or 200,000. This is additional coverage. Yep. Right. So this is additional coverage. So we want to keep it simple. Right? We don't want an exact number. We don't want them to replace their actual mortgage protection for just an accidental. That is not what we want. Right? So we want to, right? That's a great way to just show them, and it's a few dollars, right? Either way, it's not going to make a difference. So right round up and down to the next 100,000 of whatever their mortgage is. Right? And if you're showing guaranteed advantage with Mutual of Omaha, remember you do need your health license. Okay. If you don't have it, highly suggest you go get it. If not, you can only service accidentals up to the age of 60 with American Amicable or Americo with your life license, right? But again, up and down to the nearest 100,000, and then just those 2 options, right? So the 2 accidentals for the husband and wife. And then when you're showing the mortgage protection or equity protection, whatever you want to call it, 3 options, and that's it, right? So if you're showing the full mortgage payoff, you're going to do the full mortgage for the husband, right? 300,000 is how much the house is. I'm going to show 150,000, and then maybe like 100,000. 3 options, right? So each person should only have 5 things to pick from: 2 accidentals or 3 options on the bottom. Right?
Joe, quick question for you. I just thought of this. What about showing, like, assuming it's a couple, like what it normally is, what about showing them, hey, this is going to be the price for both of you guys for 6 months or 12 months, right? And skipping the step of doing each individually and having them or you do the math. Is that something that sounds like a good idea, or is it important to have them each know individually what their cost is going to be?
That's a great question. I don't combine because it doesn't allow them to pick and choose based on their situation.
Right. If the husband needs more coverage for the wife or vice versa. Okay.
Correct. So that's why I don't do it. I've seen agents do it. I don't recommend it because of that, right? You're not letting them pick their budget, right, or whatever they're comfortable with. Because sometimes, again, whoever's making the most amount of money, they're the ones that technically need more coverage, right? Or a lot of times the husband just wants more. So that kind of takes that off the table, right, of them knowing which ones they can pick.
Yep. Okay. So maybe something to consider if they both have a roughly equal situation, but otherwise make sure it's individualized.
Yep. Yeah. So right, 5 options for every person individually, right? 2 accidentals, 3 of the next. If you're doing critical period, right, the 3 bottom ones would be, right, 6 months, 9 months, 12 months, depending on their age, right, 9 months, 12 months, or 18 months worth of coverage. But that way they can pick and choose that one, right? So in fact, great question, Nate, because that's what's happening to the appointment I ran yesterday. I should be writing apps today. Because I showed it separate, they're able to say, well, I only want this one for my husband and we're going to wait on my wife. right? Because if not, they see a combined amount and they're like, well, 150 is just out of our price range. So, Cece, you got your hand up?
Yes, I do. So I had a situation where I had the separate accident and death benefit, and then when we went to write the application, they were mad that the death benefit was small, and then it was, I mean, because it had a separate, it wasn't combined and it was a separate application, it turned them off and they didn't buy. So how do you work around such a situation?
So that's a great question, right? So the question was, when we got to the application, right, they were upset that it was separate, right? Again, that's us not doing a good job of explaining what we're about to do, right? So when we're showing that, right, at the beginning, if you're doing the role and purpose, right, the other role and purpose, that's where we say, hey, we're going to show you what I normally see other families do. I'm going to show you several options. If you like any of those, you'll be able to pick whichever ones you want. And so again, we're planting the seed of we're writing several applications.
Okay.
And so when you're showing the options, right, again, right before you show options, it's a very good idea to make sure, hey, look, I'm going to show you several things. You're going to pick and choose which one you want. We usually add, right, two of them together to make sure we're in a good budget and that you're getting plenty of coverage, right? So you probably, right, I'm not saying you did, but you probably didn't explain when you were going, right, that we're filling out multiple options.
Okay. Thank you.
Yeah, no, that was a great question. Right, so now, right, we've shown right, we talked about 3 options, right, for the mortgage protection or equity protection, 2 accidentals. The next part is just making sure, again, we're painting a picture. The best part about adding the accidental, again, 80 to 85% of our business is critical period, payment protection, equity protection, whatever you want to call it, is using the phrase, and please write this one down. So with these 2 options, right, because we're adding the accidental, this is how, Sophia, you're able to pay off the entire house if it's, God forbid, an accident. And if it's not, no matter what, right, we know Mary's going to have 6 months, 12 months worth of mortgage protection. That phrase will get you 4 apps in a home. Okay, again, Haddon, this is the way we're right with, we're going to be able to pick these 2 options. With that, that's how we're going to pay off the entire house like you wanted to, if it's an accident. And if not, right, we're going to be able to still make sure Mary has 12 months worth of mortgage protection no matter what. And then you just get quiet, right? And right, if you're doing the right things, you do the water trick. You say, hey, I've been talking all day. I'm going to mute myself and walk away, right? And when you come back, they're going to be like, well, how much are all these for together? Right? Because they understand that with these 2 options, they're paying off the entire house if it's an accident. And if not, no matter what, we have 9 months worth of equity, right? Payment protection, whatever you want to call it. So we're right on the money for 11 o'clock. I hope that helped y'all a lot. Please, again, don't go change your entire appointment, but these are really good tricks, right, of making sure we're not killing ourselves, explaining the options, keeping it super simple. And then what I highly recommend, right, is going to listen to some audio, right, of the gift of gab and the Ford, right, of how to build rapport. It really makes a huge difference for y'all. So I hope that helps. If any of this, right, you can kind of call it out and say, hey, that really did help me and help the family. If y'all can post it in band, it helps the next agent. So thank y'all for hopping on.